All right. Hey, folks. Anthony here with Special Analysis. Welcome to the daily live trade room. Appreciate the opportunity to serve you. Thank you for deciding to trade alongside me. So I want to break down, what you're going to be seeing on a daily basis, how to interpret it, the purpose of what I'll be serving during the daily live trade room. And then we'll kind of break out from there. So again, first and foremost, welcome. Glad you're here. My objective, just so that we're clear, is to interpret the market for you, identify where the opportunities could potentially be, and then in doing that, tell you what I like about it and what I don't like about it. At the end of the day, I'm not a financial advisor. This service, the experience, is for educational purposes only. I cannot tell you where to buy. I cannot tell you how much to risk. But I can tell you what the market is doing and what it's likely to do next. And the decision you decide to make inadvertently is up to you. So just so we know from a legal standpoint of what my capabilities are and what they are not, I am here to answer your questions. I'm here to interpret and analyze the market for you. So every morning, about 8 o'clock, prior to is typically when I'm up and running. Sometime between 7:30 and 7:45 a.m., you'll receive an email from me. And in that email is going to be a few things. There's going to be a link to my chart that's fully analyzed. And then another link to what I call the naked charts, which we're going to cover in just a few moments. There'll be a link to join the Zoom meeting. And there will be a link in there for this foundational video. And another link in there for the prior session's recording. And there will be an attachment to this email that has the odds enhancers list. Now, what's an odds enhancer? An odds enhancer is essentially the things that we're seeing on the screen here. Moving averages, VWAPs, MACD, volume, things of that nature, pivots. So there's a full explanation there, along with this video that you're going to have, but that PDF as well. So many people ask, well, what trade do you take? Well, if it's on that PDF, and if it's on this screen, it all serves a purpose to me. So I want all the things on the PDF to be in sync. I want all the things on the screen to be in sync in order for me to have some consideration of risking my own money. Now, I also need to take in consideration, I need an area that I can define to take profit. And I also need to know that I'm not experiencing some large, significant amount of liquidity that may or may not disrupt this opportunity. So pairing all those things together is what will make you a successful trader and analyst. So in saying that, 90% of the time that you spend sitting at your computer, you are prepared to trade. Approximately 10% of the time, you're actually in the market. This is where most new traders struggle. Because they feel like, well, if I'm sitting at the computer and I'm not hitting the buy and sell button, I'm wasting my time. And that is a huge, huge misconception. Waiting for that opportunity to come along, that you can't find a reason not to trade, is when it is time to trade. If you can find a reason within your trade plan or that checklist I provide you or the things I'm going to cover in this video that do not meet your needs, it is time to not trade. And you need to be aware of this. And those who can control their emotions, those who can manage patience, those who can consistently take the same setup over and over and over again are the traders that succeed. Is it easy? No. Is this a get-rich-quick scheme? No. This is probably the most lucrative or one of the most lucrative businesses in the entire world. Nobody got rich overnight in real estate. Nobody got rich overnight becoming a neurosurgeon or a high-end attorney or accountant. It takes years. I am here to help your learning curve, not do it for you. I am here to deliver you Monday through Friday, 8 to 11, unless for some reason I'm unable to be here for a medical reason or whatnot. I'm here to deliver you 12 years of experience to shorten your learning curve so that you are able and capable to make the best choices for yourself. So let's break down what's on the screen here. We're going to work from the top down and then we'll cover the naked chart, and then we'll cover the book map so you have some insight to what you're looking at. So I'm just going to get my cursor here. So what we see on top is called the MACD. Now, this MACD has been modified. If you have TradingView and you click on the link in your email, it will populate the way I have modified it. Okay? It is not a traditional MACD. It has been modified. Every indicator on here has been modified to suit the need that I need it to suit. So just understand, the reason I give you a shareable link is so that you can populate this on your own TradingView, pick and choose from the indicators you desire to use and the ones that you do not. That's ultimately up to you. So, modified MACD up top here. As we work our way through the screen, you're going to see these dashed lines. The orange ones are going to represent weekly pivots, and the blue ones are going to represent daily pivots. These are areas that we are likely to find support or resistance, areas that are ideal to be used as targets should we be prompted to enter a trade. Moving a little lower from there, we have 3 fast moving averages: the 8 EMA, the 13 EMA, the 21 EMA. You see this nice ribbon effect here? You can identify the 21, 13, 8. They're all basically evenly spaced apart and all basically traveling in the same direction. Then and only then is the short-term trend intact. That's what it is, folks. Okay? So unless you're a reversal trader, which is not what we're looking to do, we may take a retracement entry, but we're not reversal traders. We're not trying to pick highs and lows. We're trying to capture a piece of the bigger move. And in order to do that, the short-term trend needs to be in sync. If you look down here and you see the price all jumbled together and all inside of the fast-moving averages, well, guess what? That's choppy. And what do you have here? Chop. When you can see and identify the 21, 13, and 8 EMA, and they're all spaced out and pointing, what do you have? Impulse, correction, impulse. That, my friends, is the definition of a trend. That is what we are looking for, okay? So that's the fast moving averages. We also look at the 15-minute moving averages, and for the sake of saving space, I add them to this chart in the form of these dots. Now, the purple dots are the 15-minute 21 EMA, and the pink dots are the 15-minute 8 EMA. We want to see the pink dots leading the purple dots to the upside, or inversely, the pink dots leading the purple dots to the downside. That tells us the higher time frame trend is in sync. Okay? If we're not working with the overall trend, we're going to suffer some pain. The trend is your friend. I know it sounds corny, but the fact of the matter is you will statistically have more profitable trades by following the trend. Period. End of discussion. Non-negotiable. Okay? Next, we're going to talk about the VWAPs. I use 2 VWAPs. One is a fixed VWAP, which is traditional, and the other is a rolling VWAP, which does not make a hard reset at a session break. The rolling VWAP is the orange line, and the fixed VWAP here is the blue line. Again, these are all generic indicators. You can access them for free on TradingView. You'll see these very thin counter trend lines that occur. These are a trend line with break indicator offered by Lux Algo, 100% for free. We'll use these to identify corrections in the market. So had a little push, correction. This is the pivot high, looking for a break above. In this instance, we were in the opening range. We waited for this candle right here. For those who didn't take this trade, the market pushed higher, pulled back, corrected into this area of support, which I identified with these 2 parallel orange lines, testing the 8 EMA, respecting the 13, closing back outside before it ran to our next area of resistance. That is a very, very clean retracement and entry opportunity. This yellow box that you will see every morning, I will populate this yellow box by hand from 9:30 to 9:45. That is what's called the opening range. The opening range is where the majority of the volatility will hit the market, the majority of indecision, and we want to respect this range so that we don't try to partake in the market when it's the buyers and sellers are ultimately duking it out and fighting each other. And then all the way in the bottom here, we have volume. So this tells us, are the buyers in control? Are the sellers in control? Is the volume higher than average? Is it normal? You can see the spikes, so on and so forth. So that's what we are looking at here, and all these things are on the PDF that is attached to the welcome email and the email that goes out every morning. I take every single one of them in account before I enter a trade. So if you want to consider trades that I consider, then you're going to want to take every single one of the things that I just mentioned into account. So that's again, your prerogative. If there's components here that you desire not to take into your account, well, then that's fine as well. But I encourage you to trade consistently, because without that consistency, you will not ever find profitability. So if I'm using an indicator, if it's on the chart, if it's something that is on that PDF, it has meaning to me. And with that meaning, if it doesn't play a role in my personal decision, then there's no reason for it to be taking space on my chart or on that PDF. So let me go to the book map next, and then we'll hit the naked chart. So the book map here is a component to read actual orders on the book. So the heat map here, where you see these orbs and these discolorations, are telling you where other buyers and sellers desire to transact based on pending orders that have been placed but have not been filled yet. And that's represented here on the COB, contracts on the book. So this tells us, hey, down here at 43.15, there's a lot of buyers and sellers that want to transact. So if we're short the S&P and we're running into a wide area of liquidity, we need to be concerned, because we do not want to run the risk of potentially finding a pile of sellers. Now, we don't know how many buyers and how many sellers exist at 43.15, where there's 61 contracts of interest, but we do know that there are buyers and sellers. We don't know how many of each, because you would have to be what's called a market maker to have access to that. And if you have access to that, you are not allowed to trade. So we will never know how many of each exist there, but what we will know, and what we do know, is that there is liquidity there. And the market will gravitate towards liquidity. It will react to liquidity. So we need to be aware of it. The book map becomes an invaluable tool when it comes time to potentially enter a trade. If you're entering a trade into an area that looks like this, you may want to say, let me see if price can overcome this first. Perhaps you get a push and then a retest, giving you that secondary entry after all that liquidity has been burned up. So those are the things I'll be talking you through as I interpret the liquidity and these traditional technicals. But onto what I call the naked chart. I call it the naked chart because it's just got less crap on it. We're talking about just bigger picture trend lines, channel structures, bigger picture pivots. We can identify lower lows, higher lows, lower highs, things of that nature. So there's just a lot less on this chart. And the reason we use this chart is just so we can scale out, look at, 5, 6, 8 hours of data without having all the other indicators on there, and just have a real picture of, is the market trending higher? Is the market trending lower? Are we, possibly retracing? Are we starting to break a trend line? You can see right here on the NASDAQ, we have a low, a retest, a higher retest, and it looks like we could be starting to break here. So this could fall back to where? The last place that it touched that channel line, right here. So we use this to look for those opportunities, able to identify descending highs, ascending lows, and vice versa. So these are all the things that we'll be looking at in the daily live trade room, all the things that we'll be interpreting for you, and telling you, giving you all this data and all this insight, so that if you're prepared to take a trade, whether it meets your qualifications. Now, to meet your qualifications, I encourage you to take out a pad and a pen and a piece of paper and write down what it is that matters to you. Because what matters to you could be different from me. I would pick and choose from that PDF what must meet your requirements, whether it's everything or just something, because you need to prove that profitable. How do we prove that profitable? Well, we write down the trade plan. We check off all the things that matter to us every time we sit down to trade before we take a trade. And then over a period of time, we prove that to either be profitable or not profitable. Now, I know my approach is profitable over time because I trade it that way. You all may, again, decide to modify it, and that's perfectly fine. I'm not here to tell you what to do. I'm here to teach you and read the market on your behalf so that you can decide what it is you want to do. And in doing that, I strongly encourage paper trading. If you are brand new to trading, I mean, you probably want to invest several months into paper trading so that you can prove your method, your emotions, your patience, and your consistency profitable. It is well worth your time to do those things, because if you don't, you are going to find inconsistency in your trading. When you move to live money, a new layer of emotions is going to come into play that you haven't experienced before. If you can't prove yourself profitable in a paper trading account, I can assure you, trading with live money is only going to complicate things even more. So it is worth investing however long it takes you to define what your trade setup looks like and what your trade setup requires for you to take risk in the market. Write it down. Check it off every time you're considering taking a trade, making sure you're meeting all of that criteria. And then start building a journal. When you take a trade, if it works, take a screenshot, jot your notes, what you did. If you take a trade, it doesn't work, take a screenshot, jot your notes, write down what you did. If there's an inconsistency between multiple trades and multiple outcomes, and that inconsistency is just market movement, well, that happens. But if that inconsistency is you, or your approach, or the odds enhancers you're implementing, or you trade it into a news release, or the opening bell, you need to have a record of those things. Journaling is extraordinarily valuable to a trader. You have to journal. Take a screenshot, move it into a Word document, write down your thoughts, write down why this happened, what you did wrong, what step you think you may or may not have missed. Did you use all your odds enhancers? Were those fast moving averages in sync? Was the MACD off the zero line, the histogram? Was the signal line leading the histogram? These are all little tiny details that you must master. If you don't master them, you will not be consistent. I can assure you, you will only get lucky for so long, and it will not last long. A disciplined trader is a consistent trader. A consistent trader is a profitable trader. If you cannot get that step down, you need to really have a heart-to-heart with yourself, figure out what's preventing you from becoming that person, those character traits that you absolutely need, and start working on that. Whether that's meditation, reading, exercise, talking to somebody about it, whatever it may be, I don't know. But that is how you become consistent in the market. And the way to learn this is to paper trade. There's no reason to risk $1 until you know statistically you win X amount of time by employing the exact same setup over and over and over again. I'm going to do all the analysis for you. I'm going to do all the interpretation for you. I'm going to tell you what I like about every opportunity. And I'm going to tell you what I don't like about it. If I say something that you don't like and you take the trade and it doesn't work out, you need to make a note of that. Because if I say, hey, listen, we're hitting a round number, there's heavy liquidity, you take the trade and it doesn't work in your favor, you may not want to do that again. It is much less painful to learn that in a paper account than it is in a live money account. Because once you start trading with live money, like I said earlier, you will endure a very different emotional ride. So you need to take all the other variables out of the equation before you bring live money into the equation. And the way you do that is practice, 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 which makes proficiency, proficiency, proficiency. This is a skill set that will take time to learn. It will take time to master. You will fail many times, but you must be persistent. Just like any great individual at what they do, whether it's Michael Jordan, Tiger Woods, Babe Ruth, I don't care. This is not a get-rich-quick overnight success. It doesn't work that way. I've never portrayed it to work that way. And I will never portray it to work that way because that's inaccurate. But if you can build the skill set on your end and you can listen carefully to my interpretation of the market, if you can listen carefully to what I tell you I like and what I don't like about an opportunity, and you can decipher what makes sense for you, you can master this. And the reason I know you can master this is because I have coached hundreds of people who have mastered this. I'm talking about people that have literally left high-paying careers to trade full-time. So, with that statement being made, I encourage you to show up to the live trade room, be prepared, take notes, take screenshots, ask questions. I encourage you to watch this video several times. I encourage you to print out that PDF, put it in front of you. I encourage you to write down your trade plan that is unique to you as a singular human being. I encourage you to do this consistently and with a great deal of discipline. Because, folks, this is the business that you can become filthy rich in your underwear. I know that sounds silly and obnoxious, but it is true. The ability to trade from anywhere in the world, understanding and employing a skill set that I am here to spend every day with you. We're talking 3 hours a day, 15 hours a week, 60 hours a month. Unless for some reason I'm out of town or for some reason I'm at a health-related appointment, I am going to be here with you. And if I can't be here with you and the ability allows me to still provide the analysis for you, that'll be made available. So I'm here for the long haul. And if you are too, you must be patient with the process. You must be consistent with the process, and you must be disciplined with the process. Because the chart's going to print over and over and over again. The biggest variable is not the market. The biggest variable looks you in the mirror every time you take a peek at it. The market will provide for you. The market in instances is not going to work for you. That's out of your control. But the way you react to it is in your control. And that there is the most important thing. So, again, I want to welcome you to the Special Analysis family of traders. Thank you for joining the Daily Live Trade Room. I look forward to working with you. The chat is privatized and open during that window from 8 to 11. I encourage you to ask questions. I will answer them out loud so other folks get the opportunity to learn as well. But you have to do your part too. You have to show up. You have to write it down. You have to build the plan. You have to paper trade. You have to refine the skill set. You have to be consistent, and you have to be disciplined. Because if you don't do your part, all the analysis I provide for you, all the interpretation I provide for you, all the things that I tell you I do or don't like about a particular opportunity don't matter if you can't be consistent and disciplined. Because you will be a wishy-washy trader, and wishy-washy traders lose money. And that is not what we're here to do. So I'll see you weekday mornings, 8 to 11. If you have questions, you're welcome to send me an email. I typically answer emails during the window of the afternoon, and I will get back to you as soon as at my earliest convenience. But during the daily live trade room, I encourage you to ask lots of questions so that I can answer lots of answers for you. Please do not ask where I personally place my trades, because from a legal standpoint, I cannot tell you. I can tell you if I like a position or an opportunity. I can tell you if I don't like it, and I can give you reasons around it. But at the end of the day, you will feel influenced to act on the market if I tell you I have put live money in the market. And that doesn't teach you anything other than to be impulsive, and impulsive traders fail. And from another legal standpoint, that's called front running, which is also highly illegal, something I will not ever engage in. So, I will tell you what I like. I'll tell you what I don't like. I'm happy to tell you, yes, this checks all the boxes. No, it's missing this or that component. When I like everything about it, you can take that as interpretation that I am considering putting my own live money to work in that opportunity. You also have to take in consideration I'm asking questions and addressing your needs before my own. That's what you're paying me to do. So I just want to clarify that for anyone who has a question about it. From a legal standpoint, that's where it is. And again, I'm here to serve your needs before mine. That's what you're paying me for. So I'll see you in live session. Hope you've enjoyed this video. Hope you've learned something about the way the market works, about things that are going to be necessary for you to succeed, and also about the tools that we employ. And again, write down your trade plan. Each one of us is going to be different. Write down the odds enhancers that meet your criteria. And I journal every trade you take. Take a screenshot. Write down why it worked, why it didn't work, and what you can potentially do different, or was it just an anomaly that it didn't work, or it did work. Okay? Look forward to seeing you in class. Hope all is well, and we're going to have a good time together. We're going to learn a lot together, and we can be along each other's journey for many, many years to come. God bless.